the media is doing us a disservice. This blanket term of crypto is a tremendous disservice, right?
Hello, and welcome to the Daily Crypto. We have with us Eric Weiss, who is going to talk about Bitcoin and how it helps in countering inflation. He is the founder of Bitcoin Investment Group, managing billions of dollars. So let's just say the man knows what he's talking about. You really don't want to miss out on this video because he shares some rather interesting information that is sure to help you out during this crypto winter. Without waiting any longer, let's get started with the video.
I think, inflation is a vector. It's not just one static number to say this is the inflation rate. And I think it's pretty well documented that inflation in the areas that matter most, whether you're talking about prices at the pump, food prices, the things that are affecting real everyday people, are dramatically higher than the 9.1%. But even if you go with the broken metrics of 9.1%, we're talking about the highest inflation in 40 years. This is dramatic. And if you look at inflation in other countries, it's considerably worse. So globally, we've got a massive problem and nobody is immune to it. Obviously, it hits people living paycheck to paycheck the hardest because they don't own assets that inflate. With this inflation, it's a really vicious thing. Everybody's in the same boat.
If the Fed is claiming 9.1% inflation rate, it's a no-brainer that the real inflation will be much higher. Eric says inflation isn't a constant number, it is ever-changing. We are seeing historically high inflation figures around the globe, and it will affect those living from paycheck to paycheck the most.
Bitcoin ultimately is an inflation hedge, and that what we're dealing with are some unique circumstances where obviously there's very thin float in Bitcoin from a trading volume point of view relative to other assets. So it's not manipulated in a negative way, but when you get things like we have now where there's a correlation to equities with Bitcoin, which I think will ultimately break because Bitcoin is not an equity. But right now it is heavily correlated, and that correlation is being enforced by big macro hedge funds who are using Bitcoin to hedge their equity exposure, particularly to NASDAQ and big tech equity. So if a big macro hedge fund has $1 billion of big tech exposure and they want to hedge that, because the correlation, with Bitcoin to tech is kind of 4-to-1, like almost a 4 beta. So if you had $1 billion of exposure, you could short $250 million of Bitcoin and be equally hedged. So if stocks go down 1%, Bitcoin, is going to go down 4% and vice versa. So I think that's reinforcing this correlation, which is kind of hurting us right now. That'll ultimately break.
There is no denying Bitcoin is a hedge against inflation. However, according to Eric, big hedge funds are having a negative impact on Bitcoin by treating it as an equity even though it's not. They use it as a hedge against their other investments like tech companies or the NASDAQ. It's only a matter of time before Bitcoin breaks free from the correlation with equities and becomes a unique asset class of its own.
I think that the Fed can be pretty effective by raising rates. It has a pretty dramatic effect. Maybe the most obvious place to see it is in housing. We're already seeing more housing deals break that are in contract than we've seen in a really long time. And just to follow that through one step, it's as interest rates go up and those mortgage rates that were 2.5%, 3.5% are now 6% mortgage rate, people are breaking those deals. Prices of houses are being revised downward. So I think we're starting to see that, and we're going to see it across the board even more. Demand's going to decrease, and I think there's signs that it already is.
Moving on, Eric says that the Fed can control inflation by changing interest rates, but it will have significant impact on the economy. He then goes on to give the current housing market as an example, where people are breaking contracts because of the hike in interest rates. Before we continue with the video, take a moment to hit the like button and subscribe to our channel to watch informative videos daily.
And the truth of the matter is, I think most people only care what their personal exposure to inflation is. How is this affecting me? And everyone goes to restaurants, everyone drives a car. Not everyone's sensitive to those prices. There are people with a ton of money who are like, I don't give a shit if the entree is $50 or $75 at the restaurant I eat. But there are a lot of people who do care about all those things. But those people, even the really affluent people, they do care about whether or not their purchasing power is impacting their ability to purchase a house, And all of a sudden, even that wealthy person who's thinking of buying, this $15 million house and is going to put, $13 million of that in debt on mortgage, they care that interest rate is 6% and not 3%. And so it impacts everyone. I just look at it through my personal vantage point to try to assess what the real impact is. And it's dramatic. I mean, I feel it.
Eric makes a very strong statement when he says that people only care about inflation as to how they are being affected from it. With the current inflation at more than 9%, it has started to affect everyone. Even the elite are becoming more cautious now.
The media is doing us a disservice. This blanket term of crypto is a tremendous disservice, right? Because it paints everything with the same brush. And even as we talk about kind of, the firms that you alluded to that have struggled over the, past handful of months with liquidity issues, even within that specific genre, I think we're not parsing it enough to see where the problems are and where they aren't. The truth is, in those areas that had problems, it was the centralized players, right? Like Celsius, BlockFi, these are centralized finance, not decentralized finance. The truly decentralized finance, where it's kind of smart contract based, no, hey, we'll make a loan without collateral kind of decision making, no back office handshake kind of stuff. They fared much better than centralized finance players do. But this general painting of this big brush of crypto with Luna and all this other crap and the stablecoin problems, Bitcoin gets lumped into that discussion. And I think that as this asset class evolves, we'll get more definition of more things. And Bitcoin really is not crypto, in my opinion. It's its own thing.
This is actually pretty accurate. The way the media portrays crypto as a whole is wrong, and a few failures shouldn't define the entire space. Eric goes as far as saying that Bitcoin is not a crypto, it's an asset class of its own. It should not be associated with other cryptocurrencies. To be fair, his point has some weight to it. Bitcoin was what started it all, and is the biggest fish in the tank with over $1 trillion market cap.
No one wants to make a ton of money in the financial world if it comes with headline risk. You insider traded, you engaged in something that, was a security before it was recognized as security. They don't want the black eye that's going to come with it. It's like, well, if you buy a lot of Bitcoin and scream about it and the price goes up, is someone going to come after you in some form of manipulation, play or something? So they just want regulatory clarity. And then when the institutions have that regulatory clarity, I think there'll be much more comfort in them allocating larger chunks of capital to it. They want to come in now and they understand hey, the price is low because these things aren't in place. So there's a risk reward profile for dipping that toe now and getting smart on it so that when there is some clarity and less ambiguity, they can just flick a switch and come in a much bigger way.
He is talking about regulations here. Since there are no set rules like we have in the stock market, bigger institutions are still reluctant in investing in Bitcoin. Eric believes that once we have proper regulations laid out, we will see more institutional investors investing heavily into the crypto space.
I think what's going to happen that's kind of key for Bitcoin is kind of what happens to gold, where there's no price sensitivity to gold. If you're at an investment bank or asset management firm, it's an allocation, right? So your investment manager will sit down with you and they'll say, well, you've got $2 million with us and we should allocate, 10% of that to gold. We'll put $200,000 into gold. There's no discussion of what the price per ounce of gold is. So when Bitcoin kind of gets to that threshold, I think we'll see that same thing and it'll be like, okay, it'll be an allocation. It'll be, we should put X% of this money into Bitcoin, not, hey, what price per Bitcoin are we trading at in dollars?
This would be the ultimate scenario for Bitcoin. Imagine investment bankers telling their customers to put a portion of their wealth into Bitcoin without worrying about the current price. Just like gold, it will become an asset that investors should definitely have some exposure to, because over time, it will become more scarce and valuable.
I think if you can get to a place where Bitcoin starts to rival gold at that, even half of gold, even $5 trillion level, $250,000 per Bitcoin, I think everything else that all the maxis dream about starts to fall into place, and all of those battles are a lot easier at 250,000 to 500,000. And if history is going to repeat itself, every time a digital successor has, replaced an analog predecessor, that digital successor has dwarfed that analog predecessor by a tremendous amount.
He says that if Bitcoin can attain half the market cap of gold at 5 trillion, we will see a massive growth in it because Bitcoin will be on track to successfully replace gold. Eric says that when we see a digital solution replace the traditional store of value, it's only a matter of time before it grows into an unimaginable size and replaces it forever. Think of how emails replaced the mailbox and changed the entire communication industry. We could see something of that magnitude. What do you think about Eric Weiss's comments? Do you agree? If not, let us know your thoughts in the comments. Share this video so others can benefit from our content too, because we strive to provide value to our viewers. See you in the next video.